Similarly, the hedge fund manager is also looking at these extreme events like the Sri Lankan government becoming defunct, so they will go and short the Sri Lankan currency. तो अभी आपको where is the doubt?
सर मेरा डाउट ये है कि ऐसे जैसे ट्रेडिंग रिलेटेड रोल्स है जो हेज फंड्स की बात कर रहा हूँ
जी
हमने बहुत सुना इन्वेस्टमेंट बैंकिंग प्राइवेट इक्विटी ये सब कॉमन एवेन्यूज है आफ्टर लाइक सीएफए आपको पाथवे देते हैं मैं स्पेसिफिकली इस हेज फंड इसके बारे में मुझे उतना रेफरेंस डेटा मिलता नहीं मैं रिसर्च किया हूँ बट इंडिया में उतना ऑल्टरनेटिव इन्वेस्टमेंट्स के अंदर आता है ये और ऑल्टरनेटिव इन्वेस्टमेंट्स का इंडिया में फिलहाल तो अभी तो मार्केट जस्ट एक नीच स्टेज पे है तो जैसे अब्रॉड में मैं परस्यू करना चाहता हूँ ऐसी अपॉर्चुनिटीज क्या सीएफए मुझे वो पेडिग्री देगी?
First of all, yeah, let us step back and not just for you, Shankar, but for everyone on the call today, understand what is hedge fund who is a hedge fund manager. Hedge fund, yeah, as a domain is one of the very exciting domains in finance, which basically looks at opportunities which are very non-linear in nature. Let me double click on what I have just said. Non-linear in nature का मतलब that hedge fund guys don't just go and buy stocks. कि अच्छा Paytm's license got cancelled. Very good. So who will gain in this? Jio Financials. Okay, very good. So let me go and buy stocks of Jio Financials. Very nice. If you do this, then how much gain are you making? Maybe 10 to 15%. If you are very lucky, you will make 20%. Hedge fund managers' target is to make at least 100% return. Because hedge fund managers' value proposition to the investors and the clients is that if you are ready to take high risk, then we will generate exponential returns. And when it is exponential, it means almost 3-digit kind of returns, 100%, 150, 300% kind of returns. Now, how do they generate this return? They generate return on some very non-linear calls. They will, with their analysis, realize that, okay, the Sri Lankan government is about to get defunct. Through their intelligence and through their very, very intrinsic analysis, because they have very specialized teams. So they are not looking at stock market, because here Shankar, Jio Financials is not just me who is looking at it. 1 crore other investors are looking at it because it is a premier thing. So whatever is in the limelight will never make you exponential returns. As they say, the gold is always in the edges or always in the extremes, which means that things which only very limited number of people are following, those things are expected to generate exponential returns, right? Like the founders of the startups. Not everybody is a founder. Most of us, including myself, would be an employee, right? We work for companies. But then there are very few amongst us who do their startups, and when they start their startups, some of them do exponentially well. Why? Because gold is always in the extremes. Similarly, the hedge fund manager is also looking at these extreme events like the Sri Lankan government becoming defunct, so they will go and short the Sri Lankan currency. Let me give you another example. They will analyze Zee and Sony very closely, and they will say that Zee is not doing well, tomorrow it will have to get sold. I have analyzed and figured out that maybe Sony will be able to acquire, and hence let me buy Zee shares today. So while the world like you and me who is just looking at the stock market is saying that, oh, Zee is not doing well, let me sell the Zee stocks, this hedge fund manager will buy the Zee stocks. Why? Because if there is a probability, or if in the future Zee gets acquired, then you will learn this concept in your CFA level 1, that the company which gets acquired, its stocks go up. The company which acquires this company, their stock goes down. The reason being that the company which is getting acquired gets a better or a superior management, and they do well. But the company which is acquiring this, low performing company, right, might perform lower. Yeah, very nice. Perfect. Merger arbitrage strategy. Wonderful, yeah. So you have already come prepared, my friend, right? So hence, yeah, all these things are done by the hedge fund manager. Now, people like you, me, several others, Brahma, who is dealing in just stock markets, we are targeting that 12 to 15% range of returns. But the person who is into hedge fund management, they are targeting these non-linear strategies to make phenomenally higher returns. And hence, this is the scope of hedge fund. So far, so good. Now, part 2 of your query. That, sir, in India, hedge fund manager, sir, these profiles I'm unable to find, and generally I've seen less opportunity. 100%, yeah. Let's be honest with ourselves and let's not fool ourselves, right? That with all our progress in the last 10, 20 years, yeah, India is still a developing geography. And we need to be honest about it. We are far away from where the US geography is today. maybe our best shot would be that in the next 10-20 years we'll come at par with China. अभी US तो बहुत दूर है हमारे लिए. And hence यार, today when we have less GDP per capita, when we have less money with our investors, our risk-taking appetite, Shankar, is also low. Only a handful of investors, handful means few thousands, not even lakhs, few thousand investors who are like founders of the company or the Mukesh Ambanis of this country, they are into hedge fund, and for that they have given it to the international investors to invest their money for. But in India, because our economy is still in the developing zone, we have less money as compared to our peers in China and US and other geographies. Our risk-taking appetite is low, and hence hedge fund, right, is effectively lesser, right, is lesser prevalent in India. Lastly, our financial market is also not very evolved, Shankar. Our rules, regulations are not very evolved, and right, because our markets only opened up in 1990s versus in US, right, where the markets had opened up maybe back in 1910, 1920 when the first bond was released, etc. So our markets are still 50, 60 years behind the international markets, and hence, in that case also, our regulatory authority also, Shankar, does not allow certain kind of risk strategies. Especially our regulators also don't allow certain strategies because our financial markets are not that evolved. Our regulatory environment is not that evolved. And hence, to protect our retail investors, they do not allow certain strategies to be followed inside the country. And that is why hedge fund manager this role is not very prevalent. Now, point number 3 is that, sir, tomorrow I am planning to do my role, or I'm planning to do an MBA from abroad. Will CFA help me? Will I be able to get into hedge fund management roles? 120%. Because of two things here. One is knowledge, second is brand. So as you rightly said, there is a complete topic in CFA which goes by the name of alternate investments. And in this, you are taught in depth about hedge fund management, the various strategies, right, the various modes through which you will analyze the returns, etc., etc. And that gives you a solid knowledge base. Like you had mentioned, merger, arbitrage, etc. Similarly, there are a bunch of various strategies which hedge fund manager follows. And all these topics are explained to you in great detail in CFA level 1, level 2, level 3. Right? And the second part of this CFA is that it also gives you a brand, that tomorrow when you are talking to these international investors who are primarily into this hedge fund management, right? And when I say investors, I'm also talking about the companies which are into hedge fund management. Then they are looking for this brand, because as I was narrating in my earlier sessions and quite a few other YouTube videos as well, that understand that you will become big tomorrow, either as an employee or as a founder in the financial space, when you are not just dealing with your own money, you are dealing with the money of the investors. And for that to happen, you need to attract the money. For that, you need to build a trust with these external investors. And how do you build this trust? Through your global brand. Because global brand is something which immediately establishes that trust, that okay, if Shankar is a CFA, then definitely he has a knowledge base as well as a very critical brand on his back, which will empower me to trust you with my money. And that is how you will have this money and grow, because especially in hedge fund management, you need large pools of data, large pools of funds. That if you try to do your hedge fund strategy with 1 crore rupees, then your chances are very low that you will be able to make money, because hedge fund management takes very bold bets and extreme bets. Which means if a hedge fund manager, and please go and research on this more, just Google, you will get a lot of things, like, right? So if you are into hedge fund management, you are taking bets as $1 billion, which is 8,000 crores. Hedge fund managers don't take a call of 1 crore rupees, 2 crore rupees, etc. because they are not traders. They are trying to seek opportunities on the extreme side. And for extreme side opportunities to materialize, your volume, which means your fund amount, has to be very high. And for that to happen, you need investors and who have deep pockets. And that is where you will be able to get this data, right? You will be able to attract this through your knowledge of CFA. Friends, if you have reached this far, I just want to thank you from the bottom of my heart. I hope you liked this session, right? And I'm sure it would have given you a lot of insights of how CFA can help you flourish in your career. Please share this and subscribe to the channel so that you don't miss out on any updates. Thank you again so much for attending this entire session. Bye-bye. Thank you.